Good evening. This is Ken Long from Tortoise Capital with an update on the washout pattern that we've been tracking in Pitney Bowes, symbol PBI, since 4 August. On the evening of 4 August, we identified Pitney Bowes as a washout candidate. It met our criteria of oversold on a Williams percent R annual basis, or minus 82 here, and oversold on a short-term basis on Williams percent R10. So it's oversold in both of those. Then we have a setup day here on the 4th of August. It meets the 3 criteria. It's a white candle, meaning the close is higher than the open. It had a higher low than yesterday's, and it closed closed above yesterday's high, which means we can put a initial stop here, a initial entry, mechanical entry, a nickel above yesterday's high here at 21. We're looking at it meets our 2-to-1 reward to risk criteria. On a simple retest of the 50-day moving average here, the 200-day moving average here, a closure of the gap, any one of those gives us a 2-to-1. So it meets our criteria. And now let's get a little update of what's going on. The day after, yesterday, in other words, 5 August, Pitney Bowes opened at the previous day's close and took off, so the mechanical entry fires. Closed very strongly, and as we said last night, that was a good candidate to hold into the close because it was so strong. Today, the strength continued. Now you can see it's most of the way to that first hesitation point at 22. So let's take a look at what's going on. With market weakness creeping into SPY, would you be wrong to take your 1.5 to 2 hour profit there? No, certainly not. Is there a reason to hold it overnight? Yes. So some things that we can do here going into the close. We could have taken a partial position and raised the stop. We could raise our stops to here. If you wanted to be a little more loose, you could say I'm going to move to no lose. Either one of those would be okay. This place also could have been a place to add to the position this morning. When you see strength in the face of the rest of the market being weak, that would be a reason to continue, because you can see it opened, it sold off, and then found strength and kept going north. That on that second penetration, that could have been a place to go higher. Okay, I want to take a look at some other things that are going on just to discuss the washout pattern in general. You can see that on the short-term basis, it was oversold and now is comfortably into the normal condition. It hasn't reached the 50-yard line yet, but it's still going. At the same time, on an annual basis, you can see that it has gone from oversold to not oversold just on a fraction. Now, here's where the stealth trade can come in. If it turns out that Pitney Bowes really was violently oversold, that the market interpreters got it wrong, there is a long move from minus 80 to minus 50 on an annual basis. This could be another $5 easily. You can see when it was up at 24, it had only gotten to about minus 70. So there's a long way to go between minus 80 and minus 50. If Pitney Bowes gets back to minus 50 and it's in the middle of its annual trading range, now suddenly it's clear that the pain is over, and you'll start seeing positive news stories about the turnaround of Pitney Bowes. This distance between minus 80 and minus 50 is what I call the stealth trade. If it turns out that Pitney Bowes is going to be a great news story in the future, this is a natural place for institutions to start adding to that position, because on a long-term basis they can see it's no longer oversold, and now they've got some room to start incrementing into that position. If they elect to do that with institutional money, here's what will happen. On a short-term basis, it'll get up into overbought conditions, and we can see from previous price levels that'll be up around this green area, 22.5, 22.75. So it's got to get through those two purple lines. If it gets through there, it would not be unusual to see institutional money to start coming in. If they do, this price will continue to be supported, and it could climb as far as 24. If institutional money does not, however, it would be normal to see it hit these resistance areas, and there's the 50 and the 200-day moving average, and it would begin to fail, and then all the reasons why it was over it was hammered here on this big day could remain in force, people would say, oh yeah, that's why this company's terrible. So what we're ready to do at 22 and about 22 and a half is be very sensitive to what happens with volume and with price. If it as soon as it starts hesitating there, we're cashing this. The central idea of the washout pattern is that we do not believe that this thing really is going to rebound. We're just being little opportunists here and getting our move from 21 up here to 22 and a half, or maybe even 23. Looking to make our 5 to 8% on this quick, sharp move. But if it goes through those price levels, we could actually see some recovery, and maybe it just comes up to close the gap or gets up into the middle and then hesitates. So we're going to be very sensitive now that we're closing into these resistance levels. So for another day or two of strength, if we see price continue to improve, we then see it overbought on a short-term basis. That would be a natural place for tactical traders such as ourselves to begin bailing out and start cashing. If institutional money does not step up to the plate, this thing would fail quickly, and that's why we would get out of it quickly. But if there's no hesitation, it keeps going through, we would go ahead and ride that puppy. So that, in essence, is the washout pattern as it continues to unfold in Pitney Bowes with some of the other ideas that are in force. Thanks.